There are ways to kind of limit risk. And one of the things I've been kind of describing in this live stream is, like I said, I wouldn't necessarily be bullish over here, and start buying now. But and let's say Bitcoin goes up to 70K, I stand to gain, let's say I buy Bitcoin right now, I stand to gain 22% if Bitcoin goes back up to the all-time high. But what I would actually be a lot more interested in is buying if we come up and then down here. I'd probably buy on this support level. And so instead of making 22%, I'm still making 17%, 1776. Wow, what a number for the 4th of July. 1776 here, 17.76%. I would definitely be interested in buying up here. I'm sorry, what am I talking about? Buying down here, and if I sell up here, I'm still making 17%, 18% compared to the 22% of buying over here. But the difference is I have so much less risk, right? Like over here, you could say it's maybe like a 50-50 chance that it goes up or down. It might not be, it might be more or less, it doesn't matter. But over here, it's a much lower chance, in my opinion, that we go down, right? If we get above this zone of resistance, and we turn it into support, then the chance that we go down is just so much lower in my book. So I just really wouldn't worry about it. So I might have like 50% risk here, but I might only have 10% risk here. So I'm actually scaling back on my risk massively by buying at a higher level. And I'm losing out on some of the profits. I'm only making, look at that again, 17.76% profit. That is so interesting the way these numbers have worked out. So I'm going to make a little bit less money, but I'm risking so much less of my capital. And to me, that just makes me feel so much safer to actually be buying in this market. And that's what I want. I want to feel safe, and I want to feel like I'm in the right place. And by the way, there's still a lot of money to be made on this kind of thing, right? I mean, like, there's a really easy kind of position that I'd be looking at here. It's already the same kind of position I've already been eyeing up. If we just kind of take the long and short tool here and look at what this might look like, I'd probably have a stop loss somewhere around 59.4. And I'd be targeting obviously this high. That's a 9.9 risk to reward. I stand to make 17% for a 1.8% risk. With 1.8% risk, I can very comfortably use 5 times leverage, 10 times leverage. I mean, if I'm using 5 times leverage, I've doubled my money. That's a 18% profit, 18% times 5. You're basically at 100% gain. Just 5x leverage is going to get me that. Obviously, I would be trading that only on the top 2 links in this description here, be it Blowfin, which is a no KYC exchange, thousands of dollars in bonuses. Definitely an exchange that's worth looking at because they don't white label their tech, or Bybit, which is the best in the game with up to $30,000 in bonuses here. I'd be trading on either one of these. I'd be using their free money, and I'd be having amazing upside for these kind of trades here, which I think is really, really important. Those of you that are watching, you can just open this up in a new tab. Blowfin, you can get started with trading, including your deposit, within like 2 minutes. They're so quick at crediting money and getting you up and running, so you can start working toward that free money they're going to let you trade with. And again, there's just so many kind of shady exchanges out here these days, that have this kind of unique benefit, of not kind of being invasive for your ID and stuff like that. But Blowfin, I don't think is one of them. So that's definitely super cool. And of course, as usual, always be mindful of your regulations. Let's see what we're talking about in the live chat here. But yeah, really, really interesting position. If I wanted to be a little bit more controlled with my risk, I don't even think I need to go this crazy, but I can move it down to 2.3% risk to reward. 2.3% risk. I still got a 7.8 risk to reward. I'm still, that's still like 5x leverage easily. There's a lot of space to be using 5. Look, by the way, just to put this in perspective, I stand to lose like, let's say 13% on this, right? I stand to lose, let's say, just for argument's sake, I stand to lose 13% here, but I stand to make 100%. I mean, the numbers just make so much sense. So I think that's a really, really big deal. Whereas over here, just in terms of raw risk to reward, I'm going to be taking on more risk, right? I mean, my stop loss is going to have to be below this wick, so that's 3.46. And I don't even know if we're going to break this resistance level. So I've got 4.5% upside, a risk to reward of 1.3. For every dollar that I risk, I only stand to make $1.30. And to the upside, yes, it's much better. I stand to make a lot more money. But first of all, my leverage is going to be a little bit lower potentially. And second of all, I don't even know if we're going to break this resistance level. But like I said, when you kind of view risk in this way, and when you view upside in this way, you really don't ask questions like, have we bottomed out, or what's going on with the market in that way. You just kind of get on with it because you know that like you don't need to catch the bottoms or the tops. You don't need to play those knife edges and stuff like that, those absolute pinnacles and absolute troughs. You just need something that's good enough And as long as you're kind of supplementing it with some nice tools, and like I said, I personally like to use exchanges like Globin and Bybit to trade, which have great tools that I love to use. They're very dangerous. You can lose your money very, very quickly on them if you don't use them properly. But I've spent the time to learn them, and if you use them, you have to do that as well. There's no way to do it responsibly otherwise. But I've been doing that, and I think that's the way I like to trade, right? Like, it means that I'm just so comfortable missing small, big parts of the move, doesn't matter, and I'm still just completely fine. I'm still going to be making money, so I think that's really cool. Smash up the likes for that if you think that was a cool, kind of important segment. Very, very important part of this video, of this live stream, in my opinion, because it's so heavily trading focused, and that's exactly what I'm doing in this market. I'm right here with you guys in the trenches. You guys already know that, and because we're taking a kind of different approach on this YouTube channel, you and I are in the very, very same boat together, and that does make us, kind of have to think about things in similar ways, which is why I think, we kind of get along so well. So what is your exit strategy on my long position, Sammy? I don't know, man. I worry a little bit less about exit strategies. I kind of just want to make the money. I've already secured some. I made more than double my entry on that position. So, that's a lot of money. I put in a decent amount of money in that trade. So, like when you get to a certain point, you can't really even care. I know that's not responsible. I probably should be a little bit more diligent about it, but I'm much more interested in future trades from now. I've taken so much profits off that trade as well by now. So, even if we continue to move up, I'll still make good money, but I'll make much more money if I kind of open a new trade and do well like that. And that's why I said I'm kind of looking at two key trades. If we kind of slowly move up, I want to short this level. And if we flip this level as support, I want to long this level. In either case, I want to trade this level if we get it. And I definitely prefer the long trade, right? I obviously prefer that Bitcoin kind of moves up from here. But Boom Select, I think it was you that mentioned the kind of halving analysis. I do think that that kind of halving theory that you've described is just perfectly on point, because it's something that Bitcoin has done every single time before, and we're just doing it again now. But obviously we've just forgotten what those narratives are, because we're kind of wrapped up in our own heads, and we're just kind of losing sight of certain things that I think are actually quite important. But people like Boom Select, they're not forgetting it, he is the kind of person, whoever it is, these are the kind of people that actually tend to get paid in this market, in my experience, for whatever that's worth. Who knows? I've only been here for 7 years, not that long apparently. So, you tell me. Leo Leas says it's going down to 41K and then some sideways and then goes back up to make another tower. Same pattern as 21. Price patterns tend to resonate. That is a very, very specific bit of analysis. You must have a crystal ball to be seeing that far into the future with all of those next steps that you've predicted so accurately. I don't know about that, man. I see where you're coming from. I think that could definitely happen, because Bitcoin loves to rhyme with history. But, when you make so many predictions that are contingent on a previous prediction, your overall probability of being correct is very low. I'm going to say that one more time for the people in the back. When you make many predictions which are contingent on the previous prediction being correct, your overall probability of being right is very low. You're just multiplying probabilities. Even if you have an 80% chance of being correct at each prediction, if you're making 5 of them, you have a very low chance of being correct overall. I actually want to put this into math for you just to help you understand, because math is the only true language of the universe. And if we look at, let's say 100 times 0.8 to the power of 5, if you're multiplying this, 5 times, you're left with an overall chance of being correct of 32%. Only 1 in 3 times will you be correct for your overall prediction if you have kind of 5 different elements to your prediction and each of them rely on the previous one being correct. Your overall chance of being correct is very, very slim. Leo Leas, I polish my crystal ball daily. That is brilliant. So you do have a crystal ball. That explains it. But I think that's important. And this is why I say that I don't know. When people ask me, what do I think is going to happen in 2 to 3 weeks or by the end of the year? I'm like, well, to answer what's going to happen in 2 to 3 weeks, I need to know what's going to happen in the next few hours and then, the next day and so on and so forth. So, I really like to kind of visualize things in this way. We can also just kind of do it like this. And again, we get the same number here, right? So 32% chance of being correct with these kind of numbers. I mean, if you're only at a 75% chance of being correct, it gets abysmally low. I mean, 75 and 80% are not that big of a difference, but now you only have less than a quarter chance of being correct. And I think that's actually a really, really big deal here in terms of doing analysis, to really kind of, give yourselves the chance to have a very kind of sober perspective on the market over here.